Hello and welcome. You tune into Market Cafe. I'm Ankita Saxena, and in the next 1 hour, I'll take you through all that transpired in the global markets and the cues you need to watch out for before the start of D Street today. The first up, let's take stock of how the US markets shaped up as far as Wall Street is concerned. Very marginal gains coming in on Wall Street. Dow at least ticked up 20 odd points. Very flat moves coming in. 0.04% uptick coming in as far as S&P 500 is concerned. That was up 0.4% at 6,964 is where it shut shop. But it's the Nasdaq Composite that saw a rally coming in the tech stocks. Now remember, on Friday we saw that reversal coming in the tech stocks. The sentiments had dampened earlier on, but we saw that reversal coming in on Friday, and Nasdaq continues to surge in trade with gains of almost 1%, 207 points uptick coming in as far as Nasdaq is concerned. Now remember, we also have investors that are hopeful that the market can sustain this upward advance after last week's sell-off that we come in. We saw the kind of fear that we saw in the mid-cap tech stocks that meaningfully failed to hurt this market on a technical bias, but we have seen that recovery come in as far as the tech stocks are concerned. So Wall Street, it was the Nasdaq that was really holding on to strong gains of 200 plus points. But let's talk about oil then. We did see oil prices that rose 1% on Monday morning, that after US Department of Transportation issued an advisory to US flagged vessels to stay as far as possible from the Iranian territory while voyaging through the Straits of Hormuz and the Gulf of Oman. And on the back of that, we did see oil prices that shot up 1%. In fact, Brent crude futures were up 1.4% to close in at $69 a barrel, and WTI futures was up 1.2% to settle in at $64.36 a barrel. As of now, if we speak, where currently the oil is priced at, it has cooled off from the 1% uptick that we saw. It is down 0.3% at $68.78 is where Brent is at, and WTI is perched at $64.11 per barrel. So that's where crude is at. As far as commodities are concerned, gold prices also saw a rise coming in, after the dollar softened and the focus turned to the US jobs data. We did see the gold prices see almost a 2% rise, buoyed by a softer dollar as investors braced for the economic data that came in. As far as spot gold is concerned, that rose 2.5% at $5,100 per ounce. And as far as US dollar is concerned, that fell 0.8% to a more than 1 week low, making the greenback price cheaper, making the bullion cheaper for the overseas buyers, and therefore we did see that uptick coming in on the precious metal as well on the back of a softer dollar. So that's how commodities is faring. But that's how basically Wall Street and the commodities fared. But let's move on and to another piece of news that is coming in as far as global markets are concerned. Alphabet has flagged new risks from its massive AI push, warning that heavy infrastructure spending could hurt margins and even disrupt its core advertising business. In its annual filing, the tech giant cautioned about excess capacity and long-term contract liabilities. The fund expansion, Alphabet is planning a $20 billion bond sale, including a rare 100-year bond, as capex may touch $185 billion in 2026. And Saudi Arabia's Public Investment Fund is set to unveil a major 5-year strategy reset. Shifting focus to industry, AI, minerals and tourism, the move marks the biggest rethink yet under Mohammed bin Salman's Vision 2030, with costly mega projects being scaled back. The flagship project NEOM will pivot towards renewable energy, green hydrogen and data centers as Riyadh looks to attract more global capital and fiscal pressure. And Chinese EV major BYD has sued the US government, challenging auto tariffs imposed under Trump's emergency powers. Filed in the US Court of International Trade, the case argues that the law does not allow broader taxes and seeks refunds for duties paid since April. The move comes ahead of a key Supreme Court ruling. And more on the global front, UK Prime Minister Keir Starmer is under immense pressure to step down over the decision to appoint Peter Mandelson as ambassador to the United States. Peter Mandelson's ties to Jeffrey Epstein has put UK PM in a spot. Two of the Starmer's close aides have stepped down after coming under fire, but Downing Street has said that Starmer is not quitting from the post as of now. Amid the speculations, reports suggest that the Labour MP Shabana Mohammed, who is the UK Home Secretary, could actually take over. And former Indian skipper Virat Kohli and Rohit Sharma downgraded to Group B in BCCI annual central contracts. Test and ODI skipper Shubman Gill, Jasprit Bumrah and Ravindra Jadeja kept an A grade for central contract. 30 senior men cricketers awarded central contract as BCCI do away with the A+ grade. Skipper Harmanpreet Kaur, Jemai Rodriguez, Smriti Mandana and Deepti Sharma get an A grade in the women's central contract. NET now learns from reliable sources that Avram Glazer, owner of the EPL football club Manchester United, is heading towards acquiring Royal Challengers Bengaluru, winner of the 2025 IPL season. Glazer's bid of 16,000 crores is higher than other contenders, notably Adar Poonawalla and Manipal Group's Ranjan Pai. Anurag Joshi is joining in with details.
The owner of Manchester United is edging closer to acquiring IPL franchise Royal Challengers Bengaluru. Avram Glazer is emerging as the frontrunner to acquire RCB from United Spirits. Glazer's bid is for 16,000 crore rupees, that is $1.8 billion. And this is higher than competing bids from Serum Institute of India CEO Adar Poonawalla's 15,000 crore and Manipal Group's Ranjan Pai's at least 10,000 crore, sources have told ET Now. The Royal Challengers Bengaluru was the winner of the 2025 IPL season. RCB is owned by Royal Challengers Sports, which is a unit of liquor major United Spirits. United Spirits is controlled by Diageo PLC of UK. Diageo has been seeking a value of about $2 billion for closing a transaction, and it remains to be seen that Avram's bid, which is $1.8 billion, how close this draws the buyer and seller in the transaction. The deal has evinced interest from other potential suitors, including Pat Jindal of the JSW Group. Some PE investors have also explored and evaluated buying the United Spirits stake in RCB, and key among them has been EQT, which has evaluated the transaction in the recent past.
And with that, it's time for a quick break. Don't go anywhere, we'll be right back. Welcome back. You're tuned into Market Cafe, where we're getting you all the updates from around the world and how the D Street is going to look like and what the setup really is. But let's take stock of how Asian markets have opened up at this juncture. Now, we do see a sea of green coming in as far as Asian markets are concerned, especially Nikkei. Now, remember, we did see that landslide victory coming in for Sanae Takashi in Japan, and post that, Japanese markets have been on a tear. In fact, today they continue the rally. They are up 1.5% in the trading session. In fact, they've crossed the 57,000 mark, and also Topix was up 1% to reach an all-new record high. As far as Shanghai is concerned, that's up 0.1%, and Hang Seng is also trading up more with gains of more than 0.5%, 0.6% gain coming in on Hang Seng Index as well. Kospi is trading up 0.7%, and S&P ASX 200 is up 0.4% right now. And let's pull up the charts for GIFT Nifty as well, and what that indicates for the Indian markets. Well, GIFT Nifty is also indicating towards almost a 90% uptick coming in on Indian markets as well. A 0.3% uptick coming in on GIFT Nifty as well. So a positive start is what the global markets, the global handover and the Asian markets are suggesting for Nifty. But let's move on to how the markets fared, in the trading week. It was a strong start to the trading week with Nifty above the 25,800. Nifty Bank and broader market also posting strong gains. The PSU banks durables were the top sectoral gainers. On the other hand, it was IT and FMCG that lagged in trade. Meanwhile, SBI and Shriram Finance were the top gainers in the benchmark index. Snehi is joining us with the roundup of the previous session.
Well, yes, overall a good day for the market and a good start to the week, because the Nifty shut shop in the green with an uptick of about 0.7% and above the 25,850 mark. So 25,867 to be precise is where the Nifty spot ended the day. A very good move for the Sensex as well, 0.6% higher. Nifty Bank was a real outperformer, of course led by that 7% jump that we saw in SBI, and of course PSU banks and private banks both did okay, and you had a about a 1% jump, to be precise, 0.9% jump on the Nifty Bank. The India VIX is also up 2%. But if you take a look at the broader end of the market, more exuberance over there, 1.25% jump for the Nifty Mid Cap Index. In fact, 1.5% jump over there. Nifty Small Cap Index too was higher by about 2.7%. So very good move coming in from the broader end of the market. Lots of capex announcements, earnings as well as order wins kept a lot of the stocks from the broader end in focus. If you take a look at some of the top Nifty gainers, SBI, of course, on the back of robust earnings, positive brokerage outlook and good management commentary, was up 7.5%. Shriram Finance not too far behind, 6% uptick over there. Grasim, Titan ahead of their earnings did very well. Dr. Reddy's, Ultratech, Tata Steel, Hindalco, all of them saw gains anywhere between 2 and 4%. On the flip side, it was Max Health that was lower by about 3%. Power Grid, NTPC, ITC, ONGC, ICICI Bank, they saw some cuts from the Nifty 50 group of stocks. From the broader end of the market, before we talk about that, let's take a look at the sectoral gainers and losers. Nifty PSU banks up 3.25%, led by SBI, Indian Bank, Bank of India, IOB, PSB, all looking good. It was Nifty Realty that did very well for itself as well, about a 2.5% uptick on that index, led by Godrej Properties, a 6% jump there. Brigade, Lodha, Anandraj, Signature, all of them did well. Other than this, all the sectors ended in the green. You had Nifty IT that ended absolutely at the flat line, but still managed to eke out some sort of nominal gain. You only had Infosys and Wipro from the IT pack that closed in the red, but other than that, LTI, Mindtree, HCL Tech, Persistent kept the Nifty IT in the positive as well. So metals, pharma, auto, bank, energy, FMCG and IT at the end, that's the pecking order, with of course PSU banks and realty leading from the top. From the broader end of the market, it was names like Shipping Corporation of the back of very good numbers, about a 20% uptick over there. Transformers and rectifiers was up 15%. Kalyan, good numbers, 15% higher on that one. PCBL Chemicals, BEML, Kim's on the announcement of a further stake acquisition in their subsidiary, and good earnings did well as well. It was Crompton Greaves, the other gainer that did very well. On the flip side, Concord Biotech, Kaplan Point, REC, Sarda Energy, Max Health, these are some of the stocks that were under pressure. And in fact, IDBI Bank, Five Star Business, Siemens and Page Industries were under pressure too. So yes, lots to talk about. But all eyes are going to be on the weekly Nifty expiry on Tuesday. So watch out for any market volatility if at all. But yes, the first day of the trading week has ended on a very positive note.
All right, so previous session ended on a positive note, but remember today is Nifty's weekly expiry, so we will expect some volatility coming in. But let's go across to my colleague Rabinder, who's standing by with all the stocks that you need to watch out for today's trading session. Take it away, Rabinder.
Well, as on the back of management rejects, City Union Bank can be in focus, where RBI has approved the Vijay Anand as a new MD and CEO of the City Union Bank with effect from 1st May 2026, Succeeds and Kamagodi. So back of this, City Union Bank can be in focus. Keep an eye on Gravita India, where company will acquire the Rashtriya Metal Industry for 800 crore, marking entry in the copper alloys. And Railtel can be in focus on the back of their order, where the company has won order of rupees 455 crore from the Western Central Railway. Seagull India can be in focus, where a company has bag order worth of rupees 1700 crore from the Reva Ultra Mega Solar in the Madhya Pradesh. So back of this, Seagull India can be in focus. Keep an eye on Marico on the back of their acquisition, where company will acquire a 75% stake in Sikin Tech, which is a Vietnam-based beauty brand, and the cost of the acquisition will be 262 crore. Sambhav Steel Tube can be in focus on the back of their MOU, where company has signed an MOU with Ministry of Steel for PLI scheme worth of rupees approximately 362 crore. And lastly, Ipca Lab can be in focus, where company has commenced commercial production at the new facility of rupees 182 crore manufacturing facility in Varda. So back of this, Ipca Lab can be in focus.
All right, so those are the counters that you need to watch out for in the trading session today. But let's talk about the cues that you need to watch out for. And for that, my colleague Snehi is now joining us. Take it away, Snehi.
Well, yes, lots of cues to watch out for, and the big one to be watching out for back home is going to be the monthly, or which is the January data for AMFI as well as SIP numbers. That's going to be a key metric to watch out for, so keep a close eye there. Along with that, Tuesday means it's the day of the weekly Nifty expiry, so watch out for any volatility in the market, if at all, on account of this expiry day. From the US, retail sales are going to be in focus, and in terms of global earnings, all eyes are going to be on Barclays, Ford, Coca-Cola as well as AstraZeneca. But shifting focus back home, if you take a look at the Q3 earnings from the Nifty group of stocks, four companies, Grasim Industries, Apollo Hospitals, Titan and Eicher Motors will be coming out with their Q3 earnings, but even from the broader end of the market, it's a whole host of companies, the likes of United Breweries, you have IndiCube Spaces, Chambal Fertilizers, Samvardhana, Motherson, you have Prince Pipes, Edelweiss, Finolex Cable, Balrampur Chini, Oil India, Dilip Bilcon, TVS Supply, Wakefit, Hindustan Foods, and a whole host of other companies. So watch out for all of these as well. In terms of corporate action and board meetings, Torrent Power and Safari Industries, watch out for both of them because the board of both of these companies are going to be meeting to mull fundraising. Lock-in period is going to be ending for some of the recently listed names like Pine Labs, wherein 3% equity comes out of lock-in. And for Unicommerce e-Solutions, 22% equity comes out of lock-in, so watch out for any volatility, if at all, over here. And lastly, in terms of some other events that we are going to be tracking, Dallas Fed President Lori Logan is going to be speaking at an event, and so watch out for any commentary, any indication on US macros here. And the International Energy Week is going to be beginning in London, so keep a close eye there as well, and watch out for all of these cues.
All right, so those are the cues that you need to watch out for. But with that, it's time for us to slip into a short break. Don't go anywhere. More updates on the other side. Stay tuned. Welcome back. You're tuning to Market Cafe. IRDAI chairman is meeting the insurance CEOs today with commissions firmly in focus. Sources say that new commission structure rules likely to be discussed in the meeting. And Anurag is joining us with the details of that.
Some development in insurance space related to the commission structure, and as per our sources, IRDA chief, IRDA chairman today meeting insurance industry's leader, insurance companies CEOs to discuss the new commission structure. So insurance companies has already submitted their proposal to the regulator for new commission structure, and as per our sources, insurance companies have suggested deferred commission structure. For individual agents, commission can be deferred in a 3-year period, and for corporate agent, commission can be deferred in a period of 5 years. And insurance companies have also suggested that after the new commission structure, EOM rules, expenses of management rules also should change. So these are the suggestions on which IRDA chief is meeting insurance company CEOs. We have seen that in financial stability report by RBI, concerns were raised on insurance commission, particularly commission paid by the private life insurance companies. FSR mentioned that the commission growth is not matching with the business growth of insurance companies. In economic survey also, concerns were raised on the affordability of insurance due to high commission. So following all these development, now the new commission structure is likely to be in place in next few months, and in that regard only insurance regulator is meeting insurance companies CEOs.
And let's move on then to the next story. US Ambassador Sergio Gore met with Minister Ashwini Vaishnav. After the meeting, Ashwini Vaishnav tweeted, and I quote, "Good meeting with Mr. Sergio Gore, US Ambassador to India. Discuss strengthening our strategic ties with a focus on semiconductors, electronic manufacturing and supply chain resilience. Look forward to strong participation from the US in the AI Impact Summit 2026. So that's what Mr. Ashwini Vaishnav tweeted about his meeting with Sergio Gore. And at the reception at Sergio Gore's house, Union Commerce Minister Piyush Goyal was in attendance and hailed the strengthening ties between the two nations. He also made a quip about US 18% reciprocal tariffs on India. Let's listen in.
To have the friendship of my good friend Sergio, I must place on record the trade deal would not have been possible but for his support, his personal leadership to the entire engagement. And thank you very much, Sergio, for all that you've done to further strengthen this bond between the US and India. I wish you well in your assignment. I wish you have a wonderful stay in India. You meet all the wonderful people all across the country who would love to know you, love to work with the United States of America. And without doubt, I can tell you that this country, with all its warm hospitality, will be great fun to work in, will be great fun to go around. It's another matter that the US may not have won yesterday's match. But I must say, for a country which has not known cricket, just started onto cricket a few years ago, a couple years ago, the performance was fabulous. And Sergio, of course, was there to enjoy the match. I would have liked to go there, but was busy in Parliament in Delhi. But Sergio pointed out one very important factor. The US lost the match by 18%. And a very humble request I made to him or suggestion that if only you had made the reciprocal tariff zero, you could possibly have won the match.
And well, moving on, then India's defence manufacturing push gets a strong budget boost. Defence Secretary Rajesh Kumar Singh says the domestic spending is rising. EMCA bids are nearing closure and key defence deals remain on track. Listen into this exclusive conversation with ET Now's Sumita Kare.
Despite the sort of ups and downs on the trade negotiations part of it, which thankfully has now reached a very satisfactory solution, which is a win-win for both sides. On the military engagement, the defense engagement, we've not had any setbacks at all. In fact, even before this deal, the 10-year defense cooperation framework was signed by the Honorable Raksha Mantri, along with the U.S. Secretary of War, well before this particular signing of the agreement on the trade deal. This particular engagement, therefore, has remained robust, whether it is exercises, whether it is other collaborations. We've, in fact, asked them to provide us some particular types of precision ammunition in the context of Operation Sindoor as an emergency procurement, and that process is also on. So this relationship has not suffered, and we will continue to look at some of their platforms, some of their weapon systems that we actually need. And that principle will apply across the board, whether it is France or Israel or Germany or US. We will obviously look for options that are suited to meet our needs or to meet our capability gaps, and that process will, of course, continue. Yes, so we are very pleased with the allocations. The fact that we've received a 24% increase as part of the modernization budget and an overall 21% increase in the capex budget. Of course, the overall defense budget has also gone up by about 15%, as you mentioned. These are good signs for really expanding the defense industrial complex in this country. For a long time, we've been talking about this. We've doubled down on indigenization efforts. We've tried to ensure that 75% of our budgetary outlays, capex, is spent within the country. We've actually exceeded that target every year, and we intend to continue to sort of exceed that target. So whether we either we design and develop and manufacture in India, or in certain cases where the technology is not there yet, we do what you might call a make in India with some technology transfers. Only as a last resort, or as an exception, we'll go for imports. So that transition is showing results in accordance with the Honorable Prime Minister's vision.
Right. So when you talk about modernization and when you talk about manufacturing here in India, components ecosystem and building a solid components ecosystem plays a huge role, given the fact that it really gives value to the smaller players who are part of the components ecosystem. What is your outlook on that front, and particularly in terms of how big you want the components ecosystem be? What are some of the targets that you've kept?
So you approach it in two ways. One is that you try to sort of create these positive indigenization lists. You put it out in the public domain so that people understand that these are the areas where we would like them to focus on building indigenous solutions. In addition, over time, because of the fact that we've been giving such large orders to domestic OEMs, they in turn, in both the PSUs as well as the private sector, in turn tie up with a multitude of vendors to provide the components, and which is why we have, as you would be aware, about 400 odd largish industrial enterprises who have defense industrial licenses, but there's a much bigger supporting ecosystem of almost 16,000 MSMEs, and those are the ones you're talking about. And in my view, what I would really like to see is that these MSMEs, get orders downstream, of course, but over time they move up the value chain. Some of those tier one vendors even become OEMs themselves. So that is the kind of dynamic system the government would like to, develop, leveraging its buying power.
Right, but sir, any percentage that you have in mind as far as the growth of the components ecosystem is concerned?
No, I mean, it's not possible to have so many sort of sub-targets, but as I mentioned, we have an overall target of 75% spent within the country in Indian rupees. And within that, we also have some minimum percentage for the private sector, again, to develop this entire ecosystem.
Right. Right. So let's also talk about the fact that a recent news development has spoken about HAL being out of the bid to build India's stealth fighter jets, the AMCAs. Could you give us clarification on that front, whether they are out, not out, and what is the impact that it's going to have on HAL?
Well, I mean, see, the final decision on this is yet to be taken, so I don't want to prejudge this. But during the pre-qualification process, I can say that 3 have been recommended by the expert committee under a former DRDO chairman. And based on that, the competent authority will take a final view. Irrespective of whether HAL is there or not, let me assure you that there is significant public sector presence, even among the people who are probably going to get qualified. In fact, 2 of them have large, in fact, one is on almost a 50-50 kind of a joint venture between one of our public sector companies and...
Moving on then, CBDT has released draft income tax rules 2026 in which form have been reduced from 399 to 190, I beg your pardon. April 1st is seen as the date for the rollout of the new rules. Prakash is getting us more details on the new tax rules.
Well, the CBDT has come out with the new draft income tax rules 2026 on which public feedback has been invited. In fact, the government is all set to implement the new Income Tax Act from 1st April 2026, and therefore process has been initiated. Draft rules have been put in the public domain to get necessary feedback, which will be incorporated in the final rules. A very significant development coming in. In fact, the government is all set to implement these new rules from 1st April 2026, and it intends to bring necessary simplification in terms of procedures and languages. When it comes to overall income tax forms, which have been reduced to 190 from roughly 400 to provide much needed relief to the taxpayers. When it comes to information related to crypto trades, sources indicate that the exchanges are required to provide information related to crypto trades from next year, and necessary changes have also been made when it comes to taxable value of packages as well. In fact, as per the draft rules, motor car with the driver for personal and employment use increased from rupees 2,700 per month to rupees 8,000 per month for small cars, and for big cars the amount has been increased to rupees 10,000 per month from existing rupees 3,300 per month. Similarly, exemption limit for children education allowance increased from rupees 100 per month per child to rupees 3,000 per month per child for maximum 2 children. So these are necessary changes which have been made. Draft rules have been put in the public domain to get necessary feedback, which will be incorporated in the final rules. And the department is planning to notify rules and forms by second week of March. Back to you.
In India's AI push is in sharp focus as the country prepares to host the India AI Impact Summit, bringing together global tech leaders and policymakers to shape the next phase of AI adoption. Following major commitments from the companies like Microsoft to scale AI and cloud infrastructure in India, the spotlight is now shifting from infrastructure to outcome on how AI is being applied, the value it's delivering, and how enterprises are adapting to the agentic AI. To discuss what the summit means for India and how businesses are approaching AI-led transformation, we caught up with the top bosses at Microsoft India and Salesforce South Asia. Here's what they had to say.
First of all, we see 3 things. One, we see India. See, India has already been always one of the largest developer ecosystem in this planet. And what we see in the GitHub Copilot is the number of AI projects that is getting contributed on GitHub Copilot is second in the world and fast growing to even becoming number one by end of this decade. And that is a great signal that this country is in the grassroots is adopting AI, and the AI is diffusing very broadly, right from classroom to boardroom, from farm to finance sector. If I take now the enterprise section, if I look at the IT companies, leading IT companies in this country, there's almost 250,000 AI, M365 AI already deployed in companies like Infosys, Wipro, Cognizant, LTI, Mindtree, Infosys, and TCS. So these are the 5 leading IT companies that we are working with for in their own AI transformation journey. So I think these are some of the early signs of this transformation that the country is going is trying to go through from the world of DPI, digital public infrastructure, to the AI public infrastructure, and we see that in many different ways. And some of these is what I just talked about: the developers contributing to the AI projects, these leading industries leveraging the AI co-pilot to make their employees experience richer. So these are just early signs of that journey.
Well, Indian IT companies have weathered a lot of changes in the last 30 years and always come out on top. In fact, when cloud came in, it was also said that, there would be no jobs for the IT companies and things like that. Instead, cloud itself opened up a whole new area where services were required. When changes happen, it's not that jobs get lost. It's just that jobs get evolved. So I think what the Indian IT companies need to do is to prepare for the age of agentic. They need to be properly enabled. They need to acquire the right kind of skills. They need to understand the suite of products that they are required to deliver. And if they can change themselves, I have no doubt at all that they will be able to weather this challenge as well. But yes, the fact that things are evolving is true, and that we need to evolve very quickly along with it, that also is correct. And speed today is of the essence. Therefore, we need to get on to this as quickly as possible.
All right, with that, it's time for a quick breather. Don't go anywhere. We'll be right back. All the cues to watch out for. It was a steady Q3 for BSE this time round. New labour code dented the profits. However, the average daily premium turnovers jumped for equity derivatives. My colleague Mitali is now joining us with the fine print for BSE.
Right, so BSE saw a mixed quarter this one and actually missed the street estimates whatsoever in terms of EBITDA and EBITDA margins. The revenue, it rose around 16.4% on a sequential basis, while if you see the EBITDA, it saw an increase of 7.6% on a quarterly basis. The expenses, they saw an increase of around 24% on a quarterly basis, and that was mainly driven by the one-time labor code impact that was around 238 crore rupees. However, talking about their margins, they saw a decline from declining from 64% to now 59% in this quarter. And excluding the labor code impact, if you see the operational performance of the BSE Limited, it remained robust, it was healthy and supported by strong revenue growth during the quarter. Talking about the business front, the cash market volume, they remained steady, but the real standout was the derivatives. The premium ADTO, there we saw a surge of over 120% on a yearly basis, while also the Star Mutual Fund platform, it clocked another record quarter with transactions touching nearly 217 million. Co-location revenue remained robust at around 450 million, and management has guided that this is going to be stable going ahead as well. Also, BSE is evaluating other stock options for the product diversification while continuing to focus on expanding the participation beyond the weekly options. Looking ahead, management commentary suggests a push towards longer duration future contracts and deeper liquidity in the newer products like the Sensex futures. The revamped Bankex index is also expected to aid participation for companies' growth. So in summary, if you see, the operational performance for BSE for this quarter was robust, but the expenses rise due to the labor code impact and also cash markets that remain competitive for the company.
All right. And on the back of that, we also have S. Ramamurthy, who's the MD and CEO of BSE, who will be joining us on the market at 9:30 a.m. So watch out for this exclusive conversation only on ET Now. And now City Union Bank also will be in focus on the back of a management rejig. RBI has approved Vijay Anand as the MD and CEO with effect from May 1st. My colleague Mitali is joining us yet again with the details.
Right, talking about City Union Bank, so in a key leadership update, RBI has approved the appointment of Vijay Anand as the MD and CEO of City Union Bank, who will be taking his position in charge from May 1st for a 3-year term. Now, Anand will be succeeding N. Kamakodi, who has been in the helm of City Union Bank since May 2011. Kamakodi's current term concludes on April 30th, 2026, marking nearly 15 years of leadership at the bank. Talking about Vijay Anand, he brings over 28 years of experience across the banking, retail, lending, then risk management and also collections. And prior to joining City Union Bank, Mr. Vijay Anand, he was part of RBL Bank, heading the retail assets and collections. He joined City Union Bank in 2023 as executive president, then moved elevated to executive director in 2024 and will be joining as MDE and CEO by 2026, that is May. Also, the appointment comes at a crucial phase for the bank as it looks to strengthen the growth, asset quality and also retail expansion under the new leadership.
Ali, thank you so much for joining us with that. But let's move on to the Q3 earnings for Britannia. That is expected to report its numbers very soon. Sneha is joining in with what to expect from the company.
Well, yes, a good set of numbers is what we're expecting from Britannia yet again this time around. Just to let our viewers know, this is going to be the first earnings under the new MD and CEO, Mr. Rakshit Hargave, who assumed office on 15th of December of 2025. So on a consolidated year-on-year basis, we're expecting the revenue to grow by about 8.5%, EBITDA to grow by 12.5%, and net profit is expected to grow between 14 and 15%. And the margin is also expected to see an expansion at 19% compared to 18.4% this time last year, so a year-on-year uptick of about 60 bips, which looks very healthy as well. Overall, volume growth is expected to be between 7 and 8%, which was 6% on a year-on-year basis. And remember, in fact, in the previous quarter, due to all the GST disruption, it was a negative 3%. So this 7 to 8% number for volume this time around is also going to be a good show from Britannia. Grammage hikes in their LPUs, which is their low unit price, which makes up about 65% of their overall sales mix, will aid volume growth this time around, and roughly 85 to 90% of their portfolio has been affected by GST cut. So now all eyes are going to be on whether that GST impact, that transitory impact, is now behind the company or not. So finally, when the numbers do come out, watch out for commentary on growth and outlook by the new CEO, any new change in tone if we sense, any new management style if we're sensing based on the commentary. This is going to be important to watch out for. Demand outlook, raw material scenario, their pricing action and commentary on rural and urban demand will be very important to watch out for. So yes, all eyes are going to be on Britannia this time around, but we're expecting a good show from their Q3 earnings.
All right, so that's what we expect from Britannia, and Titan is also set to report its Q3 numbers, and Snehi is joining us yet again with all the details of what the street is expecting from this giant as well.
Well, yes, all eyes are going to be on Titan's Q3 earnings, and this time around the street is expecting a very good show, a very strong set of numbers from Titan. On a standalone year-on-year basis, the revenue is seen at 21,092 crore rupees, a very healthy uptick of 31%. EBITDA is seen at 2,200 crores thereabouts, so 46.5% uptick over here too. Net profit is expected to go up by a whopping 52%, and EBITDA margins are also expected to expand at 10.5%. compared to 9.4%, and this is very much in the management guidance range between 10 and 12%. So around that 11% mark is something that we were expecting this number to be. It's right there. So a good show is expected here too. Now, based on the management update that had come a month or so ago, segmentally jewelry is expected to do very well. The street was expecting a 34% growth, but overall the management has indicated that this time around the jewelry growth could be 41%. Gold coins have nearly doubled in sales on a year-on-year basis. Plain gold category has also grown in late 30s 30s, which is very healthy. Studded has clocked its best ever performance yet for FY26, and Studded has also seen double-digit growth in its mid-20s. Like-to-like growth for jewelry across formats is in low 30s. We were expecting a 27% around a figure over here, and low 30s sounds very good for the overall jewelry brand too. For watches, the overall growth of 13% is expected. Smart wearables are expected to still be sluggish with a cut of 26% on a year-on-year basis. For eye care, overall 16% growth year-on-year. Emerging business, we're expecting to see an overall growth of 14%, with fragrances up 22%. Women's bags expected to more than double. Taneira, we're expecting still sluggish move over here, and negative 6% degrowth is what we're expecting. And Earth, we're expecting 2 store additions on this front as well. The international business is set to have done well, 79% year-on-year growth, so we'll see what the final number here is. But when the numbers do come out, it's going to be important to look at the commentary on the response to recent lab-grown diamond launch of theirs, that new brand Beyond. Of course, commentary under the new chief in terms of jewelry. You have outlook on gold and diamond prices, Philip from the festive season, demand trends, profitability across segments, and competitive intensity and product mix, and especially the studded ratio is going to be important to watch out for. So yes, all eyes are on Titan. This time around, we're expecting a very good set of numbers.
All right, Titan also expecting good set of numbers, but good Q3 is also expected for Apollo Hospitals, and healthcare sales are expected in higher teens level on a year-on-year basis. My colleague Meryl is now joining us with the details for Apollo Hospitals.
Yes, well, Apollo Hospitals is expected to announce its Q3 results soon. So let's take a look at what the street is penciling in terms of expectations for the company. Well, we're seeing a broad-based growth when it comes to financials, with revenues growing around 15% odd levels, coming from growth across the company's segments. We're seeing mid-teens growth in the hospital segments, along with a 17% growth in AHLL. Along with this, PAT is seen expanding around 30% odd levels on a year-on-year basis. And operationally as well, we're seeing capacities at 8,281, along with an occupancy of 66%. Now, this is a figure lower than last year's on the back of continuing ramp up in the company's newer facilities. Now, this ramp up in newer facilities is going to be a key factor for us to look out for going forward, as we're expecting additional EBITDA losses on newly added beds to impact profitability on the group level. But other than this, operating expenses on the group level are expected to remain flat. Average revenue per patient for the company is also expected around 6% higher than last year's figure, due to a higher value product mix coming mainly from the company's Congo offerings. This is a key metric to track, along with the company's ARPOB, occupancy rate, as well as the new bed additions going on in Pune and Delhi. So this, coupled with the new product mix, are going to be a few key factors for us to look out for in Apollo Hospitals' Q3 results.
All right, moving on to another set of earnings, then Eicher Motors is also set to announce its Q3 results as exports remain weak amid US and Mexico uncertainty. VECV margins are expected to improve. My colleague Rabindra is joining in with more and what to expect.
Well, yes, Eicher Motor is set to announce their Q3 FY26 earnings, and in this quarter, Street is estimating a good set of number on a year-on-year basis, but flat number on a sequential basis. If we look at the revenue, then revenue is expected at rupees 6,091 crore with an uptick of 22% year-on-year basis, and with a downtick of 1% on a sequential basis, and margins is expected to around 24.7%. And Royal Enfield has posted a 21% expecting a 21% year-on-year volume growth in Q3, which is flat on a sequential basis, and on a Q-on-Q basis, domestic sales is expected to rise 91.3% from 89.7%, and export has been weak due to uncertainty in the markets like US and Mexico, and margins are likely to remain stable on a quarter-on-quarter basis. And Street is estimating our VECV margins to improve 180 basis point quarter-on-quarter basis to 9.6%. And lastly, we look at the factors to watch out for the the management commentary on the Q4 guidance and update on the EV bikes. So overall, Street is estimating a good set of number in Q3 FY26 for Eicher Motor.
All right, so those are the numbers that we are expecting from Eicher Motors. Slew of earnings that are slated. We'll get you more on that. But with that, it's a wrap on this edition of Market Cafe. I'll take a leave. Thank you so much for tuning in.